Dinesh, interest calculation. Yeah. See, before I attempted it, CA Vinay actually showed me how to do it. Thank you, CA Vinay, for helping us to get the calculations. Okay, so I'll just show it to you. It's available on the screen. In fact, CA Vinay had also emailed me about this thing. Okay, so just hold on. Hope everyone is able to see my screen on the calculations. So this is what CA Vinay helped me to arrive at. In fact, he took the time to do the calculations and share it that with me. So this screenshot, I've also shared it in the group. Dinesh, I think you are not in this group. Can you share your mobile number so that we'll add you in the group? Hope this gives a lot of clarity on how the calculations are made. The calculations are on your screen. Okay, we'll add right now. Dinesh, this number is not appearing as part of the WhatsApp. Are you on the same number on WhatsApp? Okay, so here it's on the screen. Morning I told you that we will be doing the calculation and we'll show it to you. Okay, so CA Vinay helped us to get this. So he has emailed me. I'm just showing my email what I have received from CA Vinay. Hope this gives you clarity on how the interest are getting calculated when we select monthly basis. Are there any questions on this? Are there any questions in the morning session? Any other questions in the morning session? Okay, so let's start the current session then. Okay, so let's let's look at what are all the things that we want to discuss today. Okay. Yeah. So the purpose is to increase efficiency and eliminate duplication of work. Right? Okay. So now let's move on to advanced parameters. So morning what we discussed, it was a simple parameter, simple interest calculations, interest configurations in a simple method. It's not simple interest calculation. Configuration of interest in a simple way. So now what we will be discussing is advanced parameters in interest calculation. Sorry, it's not credit controls, it's interest calculations. Beg your pardon. Okay, it's interest calculation. So the first thing is, as usual, you need to go to F11, set the features. Then you need to go to ledger alteration screen, set up that. Then at the time of voucher entry, we need to look at how the interface of the voucher entry will be, what are all the options that you will get. Okay. Then you could look at the reports. The navigation for reports is display, statement of accounts, interest calculation. You get all kinds of reports only for receivables, only for payables, or for a specific ledger, or for a specific group. Is that clear? So let's move on to Tally. Okay, so we are using the same data as usual. That what are all the data that we are using? Okay, we are using the same sample data for us to take this forward. So to set up configuration, enable the feature of advanced parameters for interest calculation. Okay, we need to go to F11, accounting features. Here you have a second option. After activate interest calculation, you have one more option called use advanced parameters. So enable this used advanced parameters. Accept it. So you have set the advanced parameters. Now in the advanced parameters, once when you set up the advanced parameters, then you could go to ledger and do the necessary configuration. So go to accounts info, ledger, alter. Okay, so example, Royal Agencies. So here you get one more option. After enabling interest calculations, you get an advanced option here, activate interest calculation. Okay, once when you go to the screen, here you also get few more options since we are using the advanced parameters. So one is the same interest parameters. Okay, by transaction, is that what you want to know? Okay, then override parameters for each transaction. So at the transaction level, it will allow you to change if you are enabling this. Okay, currently I'm making it as no. Okay, then how the interest has to get calculated, only for the added amounts or only for deducted amounts or for all. If it is for all, just make this as no. Okay, then it is asking, this is the advanced parameters. Okay, earlier it just gave only the percentage and the period of calculation. Now it is asking you multiple other details. So example, I'm just saying it's 2% per calendar month on what balances. So I could define if it's only debit balance, or if it is only credit balance, or if it's on all balances. Generally, my customers who are my sundry debtors will have debit balance. Okay, credit balance will come only if they have paid me any advance, or if there are any return of goods and he has already paid for that. So for which balances we are paying the interest? We will pay interest only on, sorry, we are charging interest. I'm sorry, it's not we are paying interest. On what balances you want to charge interest? Okay, so generally in sundry debtors, we want to charge interest for the customers where they have debit balance, means where there is a receivable entry. In few cases, the customers have paid you advance and it might be laying as credit balance in that bill wise details. In those cases, do you want to charge interest? Means do you want to pay interest? Not required. Generally, we don't pay interest on the advance received from our customers. Correct? So you could also define, okay, in simple parameters, it will be typically on bill by bill, irrespective whether it's a debit balance or credit balance. But in advanced parameter, you could go and set up saying that we require only on debit balances. Okay. So once when you select debit balance, the next is what is the applicability, when it has to be applied, when you want to charge interest. So there are two specific dates. One is from the date you are doing the invoice or from the past due date. So example I am giving you, we are doing a sale entry on 5th of April with 10 days of credit. So the customer is supposed to pay on 15th of April. Do you want to start from is what this applicability means. Hello, is everyone able to hear me? Can you please type on chat, yes, we can hear. Okay, good. Okay, so the applicability is either always or on past due date. Always is from the day you have done the invoice. Past due date is from the date this bill is due. So example, I'm doing an invoice on 5th of April with 10 days of credit. The date of transaction is 5th of April. If you say always, it will take from the date 5th of April. But if you say past due date, it will start taking only from 15th of April. Okay, so generally it will be from past due days only. No one will pay you interest from the date you have billed because you are default giving some credit period. Correct? Okay. Next is there any grace days you want to allow after due date? So in most of the businesses, okay, generally people allow 2 to 3 days of grace days because the due date might fall on Sunday or due date might fall on some bank holiday, due date might fall on a Deepavali day, okay, or genuinely the customers might have some emergency. So they might not be able to pay on the due date or on before the due date. So before you start calculating the interest, is there any grace days that you want to allow? Is what you could update here. By how many number of days? Say example, I'm just giving 3 grace days. Okay. Then you have one more type. Effective date. What should be the effective date for getting your due date? There are 3 effective dates. One is date of applicability. Say example, I told you 5th of April is the transaction and 10 days of credit. In that case, date of applicability is 15th. Due date of invoice or reference. This is the date in which the invoice is due. Okay. So this will be used if you are using effective dates of transaction. Okay. And the third, there is an effective date of transaction. So we saw while doing the voucher configuration, there was one voucher date and the effective date. All your outstanding for bill, outstanding receivables and payables, it was taking based on the effective date. Right? So which should be the date? That is what it is asking, interest applicable from. So based on that, you could specify, say example, in this example, I'm just taking date of applicability. Okay. The next is in the advanced configuration, there is also an option for you to do the rounding. See, in the last example in the morning when we are doing, we got some 916 rupees, 617 rupees and some paisas. Okay. So now if you want to round it off, you could set up the rounding. Okay, whether it's normal rounding, upper rounding, lower rounding, based on the need. Okay, limit by 1 rupee. Right? Like this, you can go on setting multiple rates, okay, for the same party. So here, what are the things that we have in advanced parameters? You have rate, okay, and what basis of calculation, then whether it is on all balance, only on credit balance, only on debit balance, that you could specify. Then applicability is what? Whether it is from the date or past due date, whether it is always or past due date. Then do you need to give any grace period, grace days, that you could specify. And then applicability from, you could also select whether it's applicable from the invoice date of applicability or due date of invoice reference or effective date of transaction. Okay, then you could also set up rounding off. If you need a rounding, upward rounding, downward rounding, normal rounding, whatever the rounding off method that you could use, and go on configuration multiple percentages also if you need. Okay, so I'm just saving this. So I have made an advanced parameters for interest calculation. Okay, so now let me just go back and make one transaction. So I'm just going to Tally and going to date. Okay, so not required, 31st 12. I'm just making one more transaction on 31st of 12. F8 is sales, local sales, Royal agencies. Okay, so 10 days of credit, Apple phone. So here I have 5,75,000 rupees as the current balance and 7 lakh as credit limit. So I have enough of money, around 1.25 lakhs still I have, that I could use this credit. So I'm just buying one Apple phone from, sorry, I'm selling one Apple phone to Royal agencies. Okay, so 10 days, by 10 January it is due, being phone purchased. Sorry, phone sold. It's not purchased. It being so phone sold. Okay, so I did a transaction. Now, example with effect to this, I'm also making one payment. Let me do one partial payment so that we could understand how this works. So on 15th of, sorry, 15th is holiday. On 16th of January, we are receiving a payment from Royal agencies against 45,000 what we had billed him. Okay, so he is paying us in cash. So he has paid us 15,000 rupees against the 45,000 rupee, the bill which was pending. So I'm just taking this on 31st March. Okay, 45,000 plus tax was billed, 53,100. Against this, I'm receiving 15,000 rupees. Partial receipt. Okay. So I made this receipt against the sale invoice we generated. Now let us go and look at the report. Display, statement of accounts, outstanding, ledger, Royal agencies. Okay, so if you look at here, this is my outstanding. Okay, now if I want to go and look at the interest calculations, I'll go to interest calculation and say ledger for royal agencies. See, if you look at here, 53,100 is the bill value. Current pending amount is 38,100. Against this, 103 rupees is the interest. So how 103 rupees is calculating? So it is saying 14 January, because there was 10 days of credit and 3 days of grace period. So the applicability due date for calculation of interest now stands at 14th of January. Because we are looking at the report as 2% interest is charged, which is equal to 103 rupees. Is this clear? So are there any questions? Okay, Rajesh, can you tell the difference between always and past due date? We'll come to that. Are there any questions now? Hope everyone is able to view my screen and hear my voice. Yeah. So were you able to follow? Are there any queries? Okay, so before anyone wants to ask any question, let us go to Rajesh question. Can you tell the difference between always and past due date? Okay, so always means, example, we are doing an invoice on 5th and we are giving 15 days of credit. Okay, so by default we are only allowing the customer to use this 15 days to make the payment. So actually I need to receive by 20th, because 5th is the bill and 15 days of credit we are given. Now from when the interest has to start calculating? Should it start calculating from 5th or should it start calculating from 20th? So if you want to start calculating from 5th, give always as the parameter. If you want the interest to start calculating from 20th, give parameter as past due date. Is that clear? Yeah. So does anyone have any questions on the example that we showed right now? Okay, so if there are any questions, put it on the chat box. Okay, we can look at it. So we'll just move on. So one more thing in advanced parameter of interest calculation. Example, I'm saying override parameters for each transaction. So if I'm accepting this, override even the advanced parameters, because we are using the advanced parameters here. Do you want to override even the advanced parameters like grace days, calculation applicability, rounding off? These are all the advanced parameters. So when I enable this and go to a new transaction, say example, I'll not save this transaction, but I'll just show it to you how it behaves. So you will select the party, then you are selecting the item 30,000 example. Okay, now once when I specify new reference, okay, so it says it's already been used, no problem. I'm just okay, so let me not use that. Okay, let me say 10 35,400. Now the new screen has opened because we are allowing them to do the parameterization. We are allowing them to override the parameters. So here for this transaction, I could always go and say, no, it is not 2%, it is 1.5%. Okay, on calendar month, 360-day month, 30-day period, all these things. And it should be only on debit balance. Okay, and in this case, it should not take on past due date, it should take always. So you could change if there is a need. Okay, then date of applicability. Okay, so here you could check here from 16th, because we are billing on 16th and we are told always. I'm giving him till 15th of February. If he pays, I will charge him 1.5%. After 15th of February, I want to charge 2%. Date specified during the entry, you need to select this. Between these days, if the credit is going beyond between these dates, you want to charge 2%. So you got a new option called date specified during the entry, because in the date, in the entry, I'm specifying it as 15th of February. So use this option from 15th of February. Okay, any number of days. So if you don't want to give any to date, just leave blank. Otherwise, if you want to charge more percentage, you could also start giving, say, like between 15th February to 15th March. Okay, if there are any credit balances, sorry, if there are any debit balances, I want to charge 2%. Beyond 15th March, I want to charge 3%. Okay, so like that, you could go on defining. Okay, so here I've just left the blank so that beyond 15th March, it is default 3%. And I'm just saving this transaction just to show you how the parameters will work. So I've just saved this. Okay, so still have some credit. I could still use this credit. So this transaction has got saved. Okay. Now, if you look at the report, the discharge, because today we have just made a transaction. So he has some 10 days of credit plus some 3 days of grace period if there is any grace period that was defined. Okay, but if I just it is 514 rupees. From 16th February to 15th March, it is 29 days. At 2%, it is 708 rupees. From 16th March till 31st March, it is 16 days at 3% at 548 rupees. So effectively, I need to charge him 1,770 rupees. So this is some of the advanced parameters that you could set so that from customer to customer,